Good afternoon. Thanks for joining us once again today. Seems like we're pretty active this week with webinars. Really exciting today, though. We've got a new story, or new to Adelaide Capital at least, which is HighGold, and CEO Darwin Green is here to walk us through the full presentation. As usual, there will be a Q&A section at the end, so feel free to put your questions in the Q&A box at the bottom. And this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. And with that out of the way, I'd like to introduce Darwin Green, CEO of HighGold. HighGold has assets in Alaska and Ontario. So looking forward to getting to know the story. Hi, Darwin, do you want to unmute?
Yeah, thanks, Deb. Thanks for the introduction. Yeah, I'm Darwin Green, CEO of HighGold. I'm a technical guy, and we've got a great technical team and a great story. And I'll bring up my presentation and just get right into it.
Why don't we start off with some of your background? I think you've worked in Alaska for quite a while now.
Yeah, that's right. So I've probably got about 20 years of history in Alaska. It's a jurisdiction we know well, or I know well. And I think that history has actually led to the acquisition of the asset that's our flagship. And, the company itself was formed as a spin out of a company called Constantine Metal Resources, where we made a discovery and advanced it to about a 15 million tons in size, brought in a Japanese smelting company as a partner there. And I was VPX there and had a lot of history marketing that company, and took the opportunity to spin out and create HighGold, taking the gold assets that were in that company and creating a new vehicle. And we're focused on high-grade gold, and that's why we call ourselves HighGold. So, I threw this slide here. I guess I should back up for a second, just talking about this presentation. I know some of the viewers are going to be pretty familiar with the story. And there's going to be some viewers that are new to the story. So I will provide an overview of the company as a whole, but a big focus of this presentation will also be to provide some better color and clarity on our drill program, which has just kicked off in Alaska. I put this slide up at the front because it's something that is always at the front of our minds: stewardship, doing things right. That also includes being good stewards of our shareholders' capital. Why High? We view the company as being backstopped by very high quality, high grade resource, but you've also got the full torque and leverage to exploration and drill bit success. And I'll walk you through those opportunities, and we're fully funded to execute on our plan with a little under 18 million in the bank. We've just launched a 20,000 meter drill plan program in Alaska. It's going to be the largest in the project's history, and it's going to be split between resource expansion and drilling for new discoveries elsewhere on the property. In addition to Johnson, we've got a very large land package in the Timmins Camp, Ontario, where we expect to be drilling in the fall and winter. We've got the people, we've got the drills, we've got the cash. I think in this industry, you need 4 things for success, 3 of which we can control, which is the people, cash, and projects. The one you can't is good fortune, but I think you increase your odds for luck when you got the other 3 covered. Quick snapshot corporately, or capital structures. So, I'd say we're coming up on 2 years of being around. We listed in 2019, September. We've done 3 or 4 raises through that time for a little over 35 million. And now still have a fairly tight shareholder or share count with 58 million issued and outstanding. As I say, sort of between 17 and 18 million cash in the bank right now. We're spending it readily in Alaska. Bringing in that cash, we also brought in a great roster of shareholders. We've got some real blue chip institutions on the roster. We've got some great high net worth mining personalities, and we've got a senior gold producer who sort of stays in the 5 to 10% range. It's great to have that support. There were some legacy warrants that carried over from the spin out of Constantine, but other than that, we've only issued warrants on our first financing. It was a half warrant. The lion's share of those have already come down, but we have another 2 million or so that will come in between now and the end of September, or should. Anyhow, so we've got lots of cash to do what we need to do. We do have a very experienced group, and we're focusing on areas that we have a lot of history with. We are technically driven. That technical team is led by Ian Cunningham Dunlop. He was formerly with the Marco Days group of companies. Was involved in discoveries and advancing assets in Nevada, Turkey, Africa, Northwest Territories. Really successful guy, and beneath him, we've got a real deep bench of solid geologists that allow us to execute our work. At the board level, Mike Cinnamon, he's CFO for B2 Gold. Michael Gray, quite a well-respected mining analyst. Lance Miller, he's our Alaska connection. He's actually a PhD geologist. He also happens to be VP of Natural Resources for NANA. It's one of the other Alaska Native Regional Corporations. We've got a deal with a company called CIRI. NANA is one of the other ones. It's great to have that voice and experience on the board. And rounding things out is Anne LaBelle. She's a lawyer and a geologist who has a lot of sustainability and permitting expertise. Wonderful addition to the board. So our assets, we've got the Munro Croesus. Well, we have 3 properties actually in Ontario, our Timmins projects. We do control one of the larger land positions within the Timmins Gold Camp for a gold explorer, and it's anchored by the Munro Croesus project that was a former past producer, producing fabulously high-grade gold. Really, really neat setting. More recently, we spent the last year consolidating land around that property, and I'll talk a little bit more about that towards the back end of this presentation. But the sort of main event or flagship for us is Johnson Tract in Alaska. We've established a mineral resource there that's 750,000 ounces gold equivalent at 10.9 grams per ton in the indicated category, and an additional 134,000 ounces inferred. So, all in, you'd be looking at just under 900,000 ounces gold equivalent at about 10 grams. So a really healthy start, very high grade resource. It is polymetallic, where about 50% or more of the value is in the gold, and the remainder of the value is split between zinc, copper, lead, and silver. Good metallurgy. It is well located. We are in the Cook Inlet region. We're just a spitting distance from Tidewater, not too far from communities like Kenai and Anchorage. Kenai supports oil and gas exploration within the Cook Inlet region. So great spot to be. And given I've got a little bit more time in this presentation than a lot of the webinars, I thought I'd touch a little bit on our partners. So we acquired this asset through a lease with CIRI. It's one of 12 regional native corporations. So Alaska has a really, really neat history in terms of how it settled native land claims. And I think it's the gold standard for how to do it. And it really makes it very attractive for investment capital. When you see companies like Barrick at Donlin and Teck at Red Dog, those are both on native corp lands. So CIRI came to us very relationship driven, and we jumped at the opportunity to explore this asset. And a little bit of a background, basically what happened when they settled the land claims in the 70s is they created these native corporate entities. They're for profit, with the shareholders being the indigenous people that live in the surrounding region. Those corporate entities could then select lands where they own it outright. They own the surface rights and the subsurface rights. And they selected areas for the resource development potential. So in our view, you can't do much better in terms of indigenous support for mining and mine development when they come to you to develop assets on their lands. And there's another unique aspect to it in that the resource revenue is shared amongst all the indigenous or all the native corps within Alaska. So Red Dog, for example, is probably over 1.5 billion now that's been redistributed throughout Alaska. Real cool story. So, just zooming in on the property here, we are close to the coast, and that's a real benefit for us. It does come with road and port easement rights. Just for scale here, the property is about 15 kilometers, and then it's long access by about 7 kilometers or so east-west. There's the main deposit, and then there's a whole series of other deposits that are not deposits, prospects within the property. We are surrounded by park, and I'll provide a little color on this. CIRI played a very pivotal role in the creation of that park in that they gave up a large part of their land selections. So it's very much understood that mining is part of the fabric, hence the road and port easement rights that are written into law. We like being close to the coast. You know, it's the lowest cost of marine transport, particularly if you're going to have a project that's going to produce concentrates like this project would. It's really attractive and an advantage to be next to tidewater like we are. So looking a little bit at the resource itself, you know, I just threw together a comp list of other high-grade undeveloped gold deposits within North America, and you see we're near the top of the list. You know, most of these are gold, some are gold equivalent, so the actual gold value in the gold equivalent is in parentheses. You'll see Cerro Blanco here. It's not North America, it's Central America. That's Bluestone's asset. I highlighted it because the chairman and founder, past chairman and founder of Bluestone, became a shareholder of HighGold last year after observing the fact that we had comparable grades, but Johnson is about 10 times the mining width, and that's the key differentiator for our project. Hodbaden's thrown in here. It's in Turkey, really because it's a similar oddball deposit, and I'll walk you through that here in a sec. In terms of just straight drill intersections, in terms of you know, grade times width, Johnson has produced some monsters. We used to top this list until last month. Newfound Gold came out with a real beast of an intersection there. Suffice it to say, this is a project that's generated some really strong intersections, and generally, as a rule of thumb, when you find that type of mineralization with a little perseverance, you usually find more. Zooming in on the deposit itself, here is a shot of the resource model, the block model. This is actually just the indicated block model in the dark shade. What really stands out here is, you know, we've got the grade that you normally associate with a 2 or 3 or 4 meter wide type of deposit. We're seeing those grades over 20, 30, 40, even 50 meters plus true width, and all in one big spot or one big blob. It's steeply dipping. You know, from a mining engineering standpoint, there's a lot to like about developing a project like this in terms of keeping our mine cost low. Carrying on with that theme, you can also get at it fairly easy. You could put a portal in the side of the hill at the valley level and just drift in about 900 meters to a kilometer or so, and you'd be right into the heart of the deposit. So that's low upfront capital to develop your project, it's fairly attractive, and lots of flat ground around. So really no red flags or concerns from a mine development standpoint. And what that means is we can focus all of our efforts on establishing scale and growing the size of the system. So, you know, our business plan really is doing just that. We think we have the makings of the ideal mineral deposit. We've got grade and we've got width. That equals generally attractive economics. But it's not just that makes a mine project. You also have to get a project permitted and developed. And we think the fact that it's small footprint, underground, native corp interest checks a lot of boxes on the ESG front. So we'll be out there drilling. We're going to be, as I say, growing the resource. And we think there's very high odds of finding other deposits within the property. And this is going to be a big, big year for us for getting out and establishing that. So quickly, in terms of, you know, defining what the prize is, you know, it's good to know what you're going for, what the ultimate potential could be. I'm not saying we are Hodmaden. What I am saying is this is a deposit. Both are very unique geologically. They don't fit well into conventional category of epithermal or VMS. They're sort of hybrids of the two. Both share this unusual combination of very high-grade gold with high-grade base metals, and it has those over very wide widths. So a lot of similarities there. The big fundamental difference is Hodmaden is a little more than 3 times the size of Johnson, but that's our target. That's the carrot that we're chasing. And it's a pretty attractive one. When you look at the economics, you know, strip away the geology, that's $1 billion net present value project with an internal rate of return of better than 50%, capex of under 300 million. That was a PFS study done at $1,250 gold. You know, that's a really, really attractive project. There's not many out there like it. And what's even more attractive about it, it's got those kind of economics, but it's got a kind of capex that basically anybody can build. It's a company making type project. So that's what we're shooting for, you know, and we're kicking off this year with high hopes to get there. So moving to the geology, you know, this is basically the pretext that will tee up our drill targeting that I'm going to talk about next. So last year was a pretty important year for us. It was our first full year of exploration. And we learned a lot about the system. We had a lot of success. We missed in a couple of areas, but overall it was a very, very positive year for us. And shown on the left here is the geologic model that we've developed. And these aren't just for having pretty figures, they actually help you go about your exploration. When you can understand how the deposit formed, you can use that to guide your drilling and exploration. And so shown here, let's get my cursor to red. We have a system that was originally flat lying. It was formed in the sub-sea floor environment. There's a footwall feeder system that's very copper rich. It came up and hit a very permeable layer. It's a dacite tuff that was rich with pumice. Don't want to get too technical here, but that's where the bulk of the main gold-rich part of the system sits to date that we found. Higher up section, there is actually VMS. We found that late last year in one of our last holes of the year. We found, it wasn't a monster intersection. It was maybe 5 or 10 meters of 5 to 10% zinc, but can prove that there is true VMS within the system. Elsewhere, we found sort of more low sulfidation epithermal type mineralization at Difficult Creek. And it's about 4 kilometers away, but we think it's part of the same overall system. So at our main deposit, however, everything's been turned on its side. It's been folded and kind of caught up in a thrust fault that's tilted it on its end. And that's what you see on the right-hand slide here. So just superimposing the alteration. You have your feeder system surrounded by this anhydrite alteration in purple. That's really important because it helps guide us into the ore deposit. It can tell us we're close, but maybe not right in it. And then the deposit itself, you see here, this thick black line, that's actually a post-mineral fault. It's displaced a portion of the ore, and I'll superimpose, like this should just keep going at depth. It's been faulted off and moved. And the prize is pretty good when you consider we have, 75 meters of 10 grams gold sitting on one side of that fault. So one would expect there to be pretty decent mineralization on the other side. Last year, we had an idea where to go. We were wrong. We've learned from that. We've retooled and we'll be back testing that target. It's one of several targets. The project doesn't hinge on that, but it is an important and would be a transformative target if we're successful. So listed here, is the overall plan for this summer drill season. Last year, in addition to drilling the main deposit, we also got people out on the greater property, checking out sort of the regional district potential. And what emerged is there was a lot of very high quality targets elsewhere on the property. So this year will very much be a split between deposit expansion and swinging for the fences of making brand new discoveries. And I'll walk you through each of these here in the next few slides. So zooming in on the deposit area, so this is down in that sort of southeast corner, lower left corner. These are the main targets that we're targeting. First and foremost, the deposit is open and we're stepping out and expanding that deposit. In addition to that, as I referenced, was the offset target. So basically last year's drilling, we learned that we needed to be further east, and there's virtually no drilling testing that area. So we will be testing that area this year. We've got some ideas on where it's gone. It definitely didn't go where we had thought it had gone. But it did open up the question that there was mineralization up there. This is where we were testing last year for the offset. We had good reason to think it was there. We've updated our geologic model, but we did hit alteration and mineralization that was pretty significant. And what it told us was that this whole corridor now is prospective. We aren't just chasing one isolated ore deposit. There's a chance for mineralization all the way along this trend. I'll now flip to a slide here that is a long section through the heart of the deposit. So we're looking to the southeast here. So, this side, you're heading up to the northeast. So shown here, this is a long section of the deposit. So our sort of sub 900,000 ounce gold equivalent is sitting in here with that dark gold color. All the red pierce points are holes we drilled last year, which were primarily step outs from that resource. And we expanded the envelope significantly. We had some pretty big holes, and we had drill intersections, and we had some that were solid but didn't compete with 50 to 100 meters of 10 grams. But we were very happy, and it was a major breakthrough to learn that the deposit was open down plunge. And so what you see is we took fairly modest step outs, and then at the end of the program, we took very large step outs and got out to here. Not the biggest intersections, but were very important because it says, hey, we're still in the system. This looks identical to what we have up here. Now what we're going to do is we're going to backfill this area because the drill spacing is too wide to make it into a resource. And concurrent with that, we'll be stepping out, taking it further along strike and down plunge. So we're pretty keen with that, with the objective at the end of this year to generate an updated mineral resource. So that'll probably come out in, I don't know, Q1 2022. In addition to that, you'll see that there's really not much drilling at all up in this upper reach up here. And one of the pieces of evidence we have to think that there might be good mineralization along trend is the fact that last year we found some surface float. Just one big boulder, it was 1 meter across, ran about 26 grams gold, 4% copper, looked identical to the main deposit. You know, and I'm a, you know, as a geologist, one thing I know is that that boulder didn't roll uphill from the deposit. It had to have come upslope somewhere. So we will be throwing holes into this vicinity up here to see if we can find the source to that as well. All the while checking the testing for the deeper offset. A lot of targets here. Hopefully I don't overwhelm people, but it's one of those types of projects. In our 2019 program, as we went public in September, we had one hole that identified a brand new style of mineralization. We referred to it as our copper footwall zone. And we hit 20 meters of 2.4% copper. Last year, some of our holes tested that target area, and it looks like it's hanging together. We got some pretty strong intervals, 39 meters of 1.6 copper with a subinterval of 14 meters of almost 3% copper. Hit up to 58 meters of 1% copper with, again, high-grade subintervals, 4.5 meters of almost 5% copper. So if you took these intersections and you put them in a copper explorer, I think the market would be pretty excited about them. Our market, we've got a lot of folks that are interested in gold, but we like this. We think it adds value to the deposit. We think a lot of these are good high-grade underground mining type grades and widths. You're going to be producing a con anyways, so we will continue to explore and expand that particular target. So now pivoting a little bit to the bigger picture, looking regionally across the property. It's quite an interesting history to this property. So Anaconda Mining, they were a really big mining house back in the 70s and early 80s. They were the first to acquire this property, and they did reconnaissance work across it that ultimately led to the discovery of the main deposit. At that time, they had identified a whole host of other prospects. And when we did our initial due diligence and we flew across the property, you could see, big visible alteration zones. It was pretty compelling, but we didn't have much data or information on these regional prospects. So one of our mandates last season, was to get out and understand the prospects better. We had guys, boots on the ground, collecting soil samples, rock samples, that sort of thing. And so what's shown here is the surface geochemistry of soils, which are the circles, and rock samples, which are the triangles. And what you see is there's pretty big surface geochem signature emerging elsewhere on the property. So the DC and Milkbone prospects, they're about 4 kilometers northeast of our main deposit, are really pretty impressive. And if you knew nothing about this property and you looked at just the surface geochem, our main deposit might not be the place you would go first. Going another 4 kilometers north, and that's not to take anything away from the main deposit. It's mostly just to highlight that this looks pretty impressive up at DC based on what we've already found at the main deposit. Up at EC, we've got about 1.5 kilometer long contour soil line. This is really early stage reconnaissance stuff. The whole thing is anomalous, 20 ppb up to 1 gram. On the other side of the valley, we've got another big gold anomaly appearing. Don't know a lot about it. We will be doing a lot of work there to better understand it, to put some geologic context to that geochemistry. But it's pretty significant in our view that you're seeing that kind of a surface geochem footprint, and it speaks to a much bigger system at play on the property as a whole. Down at Kona, we don't have the surface geochem shown here. It's not as hot, but it's probably the biggest alteration cell that we see on the property. We ran a reconnaissance IP line across that last year, and it had a boomer chargeability anomaly. So we're pretty excited about that. We're going to go in there and do some more geophysics to better refine that. But we fully anticipate to be drilling DC, Milkbone, and Kona. And I'll zoom in on this DC area because we found a brand new vein field there. It wasn't on the map, and it's pretty significant. So this is it here, shown in red are the veins. So, we tracked it out over about 1 kilometer in length, and it's up to 500 meters across the zone that we see it. It's a bit different Metal signature wise, it's quite rich in silver. So we're seeing lots of plus 100-gram silver assays, up to 1,800 grams per ton silver across the length of this new vein field. And, they're veins, it's swarms and breccias and, anywhere from 20 centimeters to 2-meter wide veins. Very, very interesting. Looks a lot like what you might see in Mexico in terms of a low sulfidation epithermal system. Unlike the main Johnson deposit, here the rocks are flat lying. And so we're in an overlying andesite here that these veins have come up through. Because they're flat lying, we know we're preserving the paleo sort of depth control on mineralization. In epithermal systems, where you sit elevation-wise when the deposit forms has a strong control on where the gold comes out. So what we see, we're way up on the ridge up here. It's hard for people to sometimes get themselves reference, but this is a ridge line up here where all the gold's sitting. And as you go down slope to the northeast, you see clay alteration and the gold really start to pick up, 20 grams over 1.5 grams, over 1.5 meters, up to 50 gram per ton gold samples, big soil anomalies. Interestingly, this is exactly where you start to transition into the lower dacite unit. It's the same unit that's the host of mineralization back at the main deposit. And then when you go to the south, another kind of clay alteration color zone here, we ran a reconnaissance soil line across that. We got up to 4 grams gold. The soil sampler grabbed a rock sampler or two along the way that ran up to 180 grams gold. So a really neat gold system emerging that seems to be at lower elevation, about 200 to 300 meters lower elevation than where we're seeing the silver. And why all this is important is we believe this vein field that you see up here is telegraphing the fact that there's a big gold system at depth. So we're going to chase these silver veins down. They're important silver targets in their own right, but it's going to be really interesting to see what happens when you intersect those veins with that lower dacite horizon that's mineralized where it skies out either side of the mountain. So it's a pretty fun target. It's never been drilled, any of this. There was 1 or 2 historic holes in 1983 and 84 up here. They got like 3.5 grams over 35 meters, so pretty significant mineralization to follow up. We're very excited about that. This is just what those veins look like. Classic low sulfidation, crustiform open space veins, vein breccias, that sort of thing. You can track them across the hillside. And I also like here that you'll see a whole series of sheeted, narrower veins, which probably suggest you're going to get grade across the wall rock adjacent to it. So, to keep things rolling here, I'll switch over to Ontario. That's the Johnson story. Look forward to hearing some questions, any questions that come from the audience. But looking at Ontario, you kind of get 2 for the price of 1 with HighGold. We've got a great portfolio of properties in Canada's top gold producing jurisdiction. This really is a phenomenal belt. These are claims, the majority of which were assembled in a very different gold market in the precursor company that we were spun out of. They've been starved for attention, and so I'm very excited to get back after it and start drilling here. We spent the last couple of years getting our heads around and preparing, geologically, doing all the targeting work. We've also, on our Munro Croesus claim that sits in this area here, we've gone in and we've actually consolidated land around it. So Croesus was a past producer. It operated from, say, 1914 to the early 30s intermittently. It was famous for producing incredibly high-grade gold. Some of the mineralization got shipped directly to the mint. There's several beautiful samples on display at the Royal Ontario Museum. Anyhow, it was mined out, but the exploration around it has really never happened since the early 1900s. And the reason for that, it's been a patchwork of different owners that date back to then. So we've done 10 separate deals over the last year and a half, consolidating that land package. That's really put us in a position to now hit it hard. Our plan will be to be drilling there in the fall and into the winter between Golden Mile and Munro Croesus, if all goes well. As good luck would have it, we've seen this end of the belt really start to come into the forefront. There's over 20 million ounces within the field of view here between past production and reserves. More recently, Moneta has really brought the spotlight to this part of the belt. They took a 2.5 million ounce resource, and now they're sitting at 8.5 million ounces. Mayfair has Fen Gib, Black Fox on this side. So stay tuned. We will be working there. It kind of gets overshadowed by our Johnson work, but it's a very attractive portfolio that we're looking to build value on. And speaking to value, I wouldn't be doing my job if I didn't say we were undervalued. Here's a lot of our peer group. I think there's a lot of room for share price appreciation with some success. You know, it's a project that's generated some of the best intersections out there. We got phenomenal exploration upside, and we've got a very high grade resource that backs us up. So this just reiterates what I said, or what I started off. You know, we are backstopped by a great initial resource. We're fully funded for everything we want to do this year, which is hitting it hard at both projects. Thanks so much.
Thanks, Darwin. That was a really good overview. So for the audience, if you do have questions, feel free to input them in the Q&A box. You would think after this many times of doing this, I wouldn't stumble, but still. So you're drilling 20,000 meters. I'm not that familiar with the story. In previous years, what would be a typical drill program on the project? Like how does
good question. So, historically, when we inherited the project, there was a total of 27,000 meters done. Since then, we've drilled another 18,000 meters or so. So this year, in context of the past year, is getting close to 50% of what's been drilled historically, which started in the 1980s and into the early 90s, and then more recently with the last couple of years. So it's a very meaningful drill program. It's going to be the biggest yet on the property.
Okay, and in terms of putting out an updated resource sort of at Q1 next year, would you anticipate in terms of like how much infill versus how much exploration, like what do you expect to see in that resource?
Yeah, well, a lot of our existing resource, about 80%, is already into the indicated category. So the vast majority of our efforts will be in expansion and growing the system. There is the one area we took these really bold step outs, and so we kind of have to backfill that area. It's not really infill; it's kind of getting that into resource because it's too widely spaced to do that. But I would say, yeah, the lion's share for sure is going to be expansion. We will have a couple of met holes drilled as well to help with that through the guts of the deposit.
Okay. And I have an audience question. How specific is your targeting for the new offset area?
Well, I think one of the benefits of a seasonal project is you get to think pretty hard about your geology because the drills aren't turning. Now, there's some negatives to it, but that's one of the definite benefits. And so we've thought pretty hard about it. Unfortunately, we don't have what we know. We got to be further east. We have very, very few drill holes that have actually gone into that panel. The ones that have told us it's actually dropped down a little bit further than we thought. But we have less control on the strike slip. So some of our drilling is going to be very wide spaced. We know kind of what elevation to go into and kind of what corridor to go into. Now we just need to kind of take some very wide spaces to track it down. We got a couple of theories that we're running with where we think it's gone, but I'm cautious about telegraphing that to the market too much, so I don't have to eat my words if we miss.
And you referenced the seasonality, and maybe you told us earlier, but what is the like when can you drill in Alaska? What's the season?
Yeah, it's funny. This year was an unusually late snowpack. And so we got in there a little later, or got started a little later than we thought. Past years, you could get in June 1. Last year we actually landed on the airstrip June 1. There was no snow. We didn't actually get drilling until the first week of July or second week of July. But we can go as deep as end of October. We were October 31st last year when we pulled out.
Okay. And are there other active programs in Alaska right now? Who else is in the area drilling?
Yeah, it's certainly picking up. There's nobody right next to us, but there's definitely Heliostar is a company, Free Gold. There's some Trilogy, Contango. I think will be drilling this year. There's some other companies out there. Ours is one of the biggest programs. I think Free Gold is a little bigger, but we've got one of the more aggressive programs in Alaska right now.
And rig availability and labor is fine? No issue?
Well, yes and no. I think in the industry as a whole, it's one of the biggest challenges. Like there's just, people and resources and assay turnaround time are very frustrating for the industry as a whole. We had the good fortune to lock up our drills last year. So we had 3 that stayed on site over winter. And they're a couple of the best drill contractors going, which makes a big difference, in terms of your ability to be successful. Yeah. And we've got all our crews and everything else. The next question is assay turnaround. So we're working on that now.
Do you have any indication of how long it's going to be?
We're pushing hard to try and get it, within sort of 2 months type thing. Ideally 6 to 8 weeks is what we'd like to push for. Historically, you pretty comfortably get 3 to 4 weeks. Last year we got 4 to 6 months. It was ridiculous. The lab in northern Alaska was where everything went was a huge pinch point. So we have adjusted our plan to make it as good as we can. So hopefully, 6 to 8 weeks we can deliver. It may be more than that. We'll see.
Yeah. So last year, I guess you could only really just drill where you plan to drill. There's no iterative process.
No, there wasn't really. No, I mean, we kind of know when we're seeing the style of stuff. Like, we don't know what the gold grades will be. We can tell when there's base metals, and we know there's very distinct, whether it's veins or silicification. So we kind of know when we're in the min, if you will. So we know enough to keep drilling, but yeah, it's you don't quite have that usual feedback that you would get.
Yeah, it's challenging. Are you, in addition to drilling, are you planning any geophysical surveys this summer or any other baseline work?
Yeah, for sure. So, from surface geophysical standpoint, we're going to do IP. We sort of did an initial orientation survey last year, and we really liked what we saw, particularly at the Kona prospect. And so we're going to get more resolution on that now, get some additional lines around that first reconnaissance line, with the idea of refining the target that we would drill later in the season. We'll probably also do that at the Easy Creek and a couple other areas. In addition to that, we're getting airborne done. The schedule's been pushed back a little bit. Again, product of the industry going off. We're promised it early May, and it's still got delayed. And that's something that's, since we found this new style of mineralization, this VMS mineralization, it's made the airborne a little bit more relevant. What we found probably wouldn't be conductive because it's so zinc rich, but if there's any copper rich sort of true blue massive sulfide out there, it should be a good tool to find that.
Yeah, you mentioned that's one of the unique features of the deposit is this VMS and epithermal style mineralization. I'm not a geologist, so I'm going to ask you to explain in very lay person terms, how did that happen, or why is it found like that?
Yeah, it's a good question. It is really unique. There's not a lot of examples like it. There's maybe Romero in the Dominican Republic and Hod Maden are these ones that have attributes of both. Depending on which geologist you talk to, you'll get a different reason or answer. But in my view, a lot of it comes down to you're in one of these shallow emergent volcanic arcs, and those are great places to be to find mineral deposits. You can get a full spectrum of deposit types, whether it's low sulfidation or epithermal. But in that environment, we know for sure that we were in shallow water. I think it's that shallow water environment where you're kind of transitioning to being what we call subaerial or not under seawater versus below seawater makes the difference. Just a little bit of difference, on the edge of these volcanic arcs, you can transition from classic VMS to classic epithermal to porphyry to high sulfidation epithermal. You can get a little bit of everything. And so we're definitely keeping our eyes open and not getting too locked into any one sort of model as we go forwards, because we expect across the property, you could get exposed to a lot of different styles of mineralization.
Does that affect your metallurgy or make it more challenging?
Well, actually, I think that not specifically, because I think you're going to find any one deposit is pretty specific, but it is a good question when it comes to anytime you have a polymetallic gold deposit where the gold is with the base metals, you do have to ask, what does the metallurgy look like? And particularly when you get at the VMS end member spectrum, sometimes you get less than 50% gold recovery in those systems. We benefit from some past work by some very good quality operators, and it does have good metallurgy. Historically, it was in the 80s to 90s. They got gold recoveries as high as 96%. So we're very comfortable with it. It's coarse grained mineralization, but it's a good question to ask. We're going to do more just because we have some questions we want to tighten up because a lot's changed in the last 25 years when this project was last looked at. But we don't see any fatal flaws. And one of the issues that can come in metallurgy is sort of called toxic elements or deleterious elements, the arsenics, the mercuries, the antimonies, and you will often see them in these, in these gold-rich polymetallic deposits. SK Creek, the original SK Creek was a classic example of that, where it was just dripping with arsenic. The new stuff they're finding is much lower in those numbers. Anyhow, we're very clean. The long story short, we're very, very clean.
Are you planning on doing any metallurgical studies this summer?
Yeah, we will. Yeah, for sure. We're working with consultants right now on defining that program, but with the idea that we're going to generate a resource at the end of this drill season. Once we get all the drill results back, we'll update a resource. And depending on what we see, you want to be in a position to be able to launch economic studies. And so we need the metallurgy. We don't know yet whether we're going to do that. If we feel like we've totally got the tiger by the tail here, and it's early days and growing something, we probably wouldn't do an economic study. But we'll see what the market tells us we should do.
Okay. And going back to sort of Alaska, I have some questions about environmental stuff. Does being located in a national park present any unique challenges or permitting issues?
Yeah, I think it's certainly, I think operators anywhere you are you're going to be very sensitive to the environment you're in. I think optically, it certainly elevates the optics of the project. What we've seen to date, no, where the deposit itself sits is on fee simple land, which means the Native Corp owns the surface and the subsurface. And, we haven't seen any specific park related challenges to that. In fact, we've seen none. The fact that the road and port easement are written into law should not make it a challenge. We have interacted with the Park Service on our northern part of our property, and they're great to work with thus far. But for sure, I think from an optic standpoint, our view, however, is with CIRI being a major player in the formation of that park, and there's a real implicit understanding that mining is part of the fabric there. And if you look throughout the state in terms of political support, it's generally there is a lot of support when you realize the revenue. They selected these lands to generate revenues to support their people, so there's a lot of appetite politically to support those types of projects.
Are there any environmentalist or NGO groups in the area?
Yeah, Alaska for sure has they're and they're good at what they do. They've got a lot of experience, and there's a couple of high profile projects in Alaska that have brought that attention. What I've seen in general, one of the core issues when it comes to environmental sensitivity within Alaska is salmon. They're as sacred to Alaskans as cows are to Indians. It's one of those things, and they should be protected and looked after, right? Where we are, there's the water courses that we're in are not significant salmon streams. Every creek in Alaska has has fish, but these aren't major salmon fisheries, say like Bristol Bay or some of these other project areas.
Okay. And then I have some questions about DC. I think it's Difficult Creek. Is that right?
That's right. Yeah.
Okay. So does your DC discovery make you think of other targets where the dacite unit is currently blind that could be detected with geophysics? Asked by somebody that knows mining better than me.
Yeah, for sure. We what we've done is we've clued in, for whatever reason. I don't know if it's has something to do with the chemistry of that unit that makes it a good host, or if it's just paleo elevation that makes it a good host, but clearly the gold likes to hang out in that unit. So we've ID'd it as an area to target, and we'll, it's very early days for us really on the property, but we will be, that is a part of our geological toolkit is targeting that unit and doing some geophysics to see where it goes. Okay,
and 3D modeling coming out, he's asking, is there going to be 3D modeling coming out that's available to the public? Geophysics work at DC being released to the public, or any promising results from analysis?
Yeah, we generally are pretty good with our disclosure. We try to communicate what we have. My standpoint is, if we're going to put something out there, we want it to be meaningful and people can understand it. 3D models sometimes are more confusing for people to look at than revealing. So we're generally, if you look at what we do when we have results out, we come out with cross sections and long sections, and we're trying to, and if we think it can be a way to help communicate the geology and what's going on, for sure. The geophysics, we don't have any out right now. I guess we haven't really put anything out publicly, but maybe we should consider it for Kona. Here's a pseudo section, here's a chargeability anomaly, so people can see for themselves what we're excited about.
Okay. And then switching gears over to Ontario, you covered it briefly. I think you said reference getting it from your previous company or entity. How did you come to have the Ontario asset? Yeah,
interesting story. So, everything came over from Constantine through the spin out and the creation of HighGold, but the real story there is Garfield McVeigh, who's the CEO still of Constantine, and who is a technical advisor for HighGold. He grew up in that area, and in fact, his great uncle and father worked on the property back in the 30s. So there's a real family connection to the property. And we've got these amazing gold samples that, were kept in his basement as a kid, and they come out at parties. And it's really quite cool. So it was in private hands for most of its life until Constantine acquired it. Constantine did put a couple programs in right around the historic shaft where the work was done. But yeah, what it's always needed is this consolidation, because it's this patchwork. We had to track down old family estates, and it was a big job actually consolidating land around the original core claims. And so, yeah, it's great. It's great to finally have that opportunity. And we're picking up these claims that were staked in 1911. They've got old pits and shafts, and haven't seen anything done on them. So we love the geology, we love the prospect there, and we like the kind of history that connects back to Garfield for sure.
Well, it sounds like the east area of Timmins is really starting to heat up with the recent Moneta transaction and Mayfair going public earlier this year. What's changed in that area? Why is it getting hot now?
Yeah, good question. I mean, it's kind of serendipity for us. We've always liked that corner of the belt, and we always thought it was a little bit underappreciated. What I see going on there now is a lot like what you've seen happen in Val-d'Or over the last 10 years, where the juniors came in and consolidated again, and then the seniors came in and consolidated them. And Moneta's case in point. I mean, they did a great job of boosting the size of their resource. They went from 2.5 million ounces to 5 or 5.5, and then they acquired O3's Ontario assets. And there's the Garrison project, which is right next door. And with 8.5 million ounces on the books, it's pretty hard to ignore. There's not a lot of those deposits or systems out there in jurisdictions like Timmins that are undeveloped and not held by a senior. So I think that a lot of people took notice, and it's exactly what it's needed. It needed that consolidation to happen. It's happening at different scales. We're doing it around our property on a small scale. They're doing it there. Now you've got Mayfair, who's got a great asset that's never really had a champion. Barrick had it, went to Lakeshore, went from Lakeshore to Tahoe to Pan American. And so now you got a group that's got a single asset focus. So I think the market's starting to realize, hey, this is an underexplored part of the belt. There's some great assets, and it's just very fortuitous timing for us. I mean, we got McEwen Mining on the other side of us too. There's lots of deposits around.
Mm-hmm. And one would imagine there's access to infrastructure, proximity to labor, all the
Totally. I mean, that's the one thing about Timmins. I mean, while some of our properties are certainly earlier stage, there's no better place to discover a mine than Timmins or Val-d'Or, right? I mean, you got the mining workforce, drilling's cheap, you got roads, you got power. It's an awesome place to work and discover and build mines.
And what's your intention with the Ontario asset this year? Like, what do you want to achieve?
Yeah, it's we've spent a lot of time kind of prepping for it, right? So we've both that's land assembly and doing geophysics and structural studies, really in preparation of being able to hit it hard in a sustained way. So last year we did raise a little over it's about 3.5 million in flow through. Mm-hmm. That we haven't really spent yet. And so we're going to be deploying that as we start to wind down in Alaska. We'll be picking up in Ontario with Golden Mile increases being our focus, with the idea that, we should have drills turning, from now through to December, on either of the projects, probably shut down for Christmas and a little bit in January. And I imagine we'll be right back at it out there. So it's been a lot of prep, and I think we've been building it to hit it hard, and it's pretty low cost exploration and pretty high reward if you have success.
Mm-hmm. And what's your long-term intention with Ontario?
That's a good question. I think corporately for us, we constantly evaluate what's the best way to kind of create value for our shareholders. One can imagine if, Johnson Tract, which is our flagship, it's not that far from hitting critical mass. And if it just a little bit of more success, you could see it kind of running away in terms of value creation. And then you go, well, are we getting any value for Ontario? And can we really rationalize spending any money out there? And if that happens, maybe you'd consider, some sort of corporate, spin out or something like that. But we're not making any promises now. For the time being, I've been wanting to drill there for about 10 years, ever since it was in Constantine's portfolio, and I finally have a chance to get after it. We've got some great targets. So yeah, I want to give ourselves the chance at that first.
I hope you have some luck there.
Thank you.
Well, I don't see any other questions. If anyone has any final questions, feel free to input them, or you can send them to me and I'll get them answered for you. Just in summary, I guess, Darwin, do you want to give us sort of the 1-minute overview of HighGold and what we can expect over the next year?
Yeah, for sure. I mean, with HighGold, you got exposure to a very high grade, high quality mineral resource. We're growing it, and we're going to have the drills turning steady from now going forward. So from a news flow standpoint, it might be a little bit of a lag a couple of months from now that the results start coming out, but they will be steady, right into the new year. We'll follow that up with a resource estimate on the deposit, and it should be a big year for us. We've got the budget to do it. If it's there, we should be able to find it.
Great. Well, a few takeaways from my perspective, like you've got a great shareholder register and structure. You've shown great discipline in your financing and how you've structured that. You're well financed with 18 million. You've got a strong, well-diversified board, actually one of the most diverse boards I think I've seen recently. You've got grade and width, a small footprint underground. You've got a great partnership, it seems, with the First Nations, and a lot of catalysts and news flow. So I think it's an exciting year. And then you've got a nice kicker with Ontario. I think there's a lot of optionality there. So should be a good year. Did I miss anything?
No, I think you got it. I should get you doing this.
But yeah, no, I'm really happy that you took the time to present the story. And yeah, I'm excited to see what happens this summer in Alaska. Hopefully you get a site visit in at some point.
Yeah, for sure. It's a beautiful place to visit if anyone wants to come up.
Yeah, I would love to. So thank you very much. Thanks to everyone for participating. And again, if you have any other questions, feel free to reach out.
Yeah, great. Thank you, Deb. I appreciate it.